You know, pretty much every trader starts in the exact same place. But the journey to actually making consistent money, it has nothing to do with some secret indicator or a perfect strategy. Nope, it's about one huge internal shift. And that's what separates the 97% who lose from the very few who win. Today, we're going to break down that exact shift.
Remember that feeling? Come on, you know what I'm talking about. You open your first trading account, you see the charts whipping around, and the possibilities, they just feel endless. There's this genuine hope, this feeling that you've finally found the key.
And then bam, just like that, the market does something you totally didn't expect. A trade that looked like a sure thing suddenly flips and goes against you. And it's a real shock to the system. You're just left there wondering, wait, what did I do wrong? Was that just bad luck or...
After a few more of those losses, that initial shock, it starts to turn into just raw frustration. You start questioning everything, your strategy, your charts, maybe even your own ability to do this. That initial excitement is long gone, and it's been replaced by this gnawing cycle of doubt and anxiety.
Okay, so this right here is the critical turning point. This is where the road forks. Most traders get stuck in this loop, and they start looking for an external fix, a new tool, a different guru, some kind of holy grail. But the real solution, the real secret, it's not on your screen. It's an internal shift in how you see the entire game.
So let's get right to the heart of it. Why do so many traders get trapped in that cycle? Well, it all boils down to this fundamental misunderstanding, this great mental deception that feels so right but leads you straight off a cliff.
And I mean, really think about it for a second. Be honest with yourself. If you absolutely had to pick one, which would you choose? Because the answer to this one little question reveals almost everything about your mindset. And honestly, it can predict your long-term results.
You're not going to believe this. A poll of traders was done asking this exact question, and a staggering 70%, 70, chose being right as more important than making money. It's just, we're wired to want to be right, to have our ideas validated.
And that right there, that is the core of the problem. When your main goal is to feed your ego, you make absolutely terrible financial decisions. It means you'll hold on to a losing trade way too long, just hoping it'll come back so you can prove you were right. It means you'll snatch tiny profits just to get that feeling of a win. Your ego feels great, but your account balance, it gets destroyed.
So this leads us to the next big idea. We have to completely reframe what a loss even is. For most of us, a loss feels personal. It feels like failure. But for a professional trader, it's something else entirely.
Think of it like this. A profitable trader sees a loss as a simple cost of doing business. It's no different than a restaurant owner paying for food ingredients. It's an expected, calculated expense that's required to be in the game. It says nothing about how smart you are. It's just data. The market is just telling you, hey, this idea didn't work out this time. Next.
And here's what happens when you don't treat it like a simple business cost. You plan for a small, totally acceptable loss. But then when the price hits your stop, your ego flares up. You think, no way, I can't be wrong. So you hold on, and the loss gets bigger. And now you start bargaining with the market. Just get back to where I was. Hope takes over, and that small, professional, manageable loss spirals into an emotional catastrophe that can cripple your account.
So listen, the crucial point is this. A small planned stop loss never blew up anyone's account, ever. It's the reaction to that loss that does all the damage. It's moving that stop loss. It's jumping right back into the market for a revenge trade. It's doubling your size to try and make it all back at once. That's not trading, that's gambling.
Okay, so if we're not trying to be right on every trade, if we're not trying to predict the future, what in the world are we doing? This is where everything changes. This is where you start to think like a pro. You stop trying to be a fortune teller and you start playing a game of statistics.
Take a look at this number, 43%. What do you think that is? Is that the failure rate of a new strategy? The number of losing days in a month? What could that possibly be? What if I told you this is roughly the win rate for traders at one of the most successful hedge funds on the planet? They are wrong more often than they are right. Think about that. It just completely shatters the myth that you need to win 70, 80, or 90% of the time to make serious money. And the math is actually super simple. Look at this. Here are 5 trades. You have 3 losses and only 2 wins. That's a 40% win rate. But because the wins are so much bigger than the losses, the account balance still goes up. It's not about being right all the time. It's about having a statistical edge that plays out over many, many trades.
The legendary trader George Soros, he summed it up perfectly. The entire game is right here in this one sentence. It's not about how often you win, it's about the size of your winners compared to the size of your losers. That's it. That's the whole game.
So, here it is in a nutshell. This is the big mental shift. You have to detach your ego from the result of any one single trade. Your only job is to perfectly execute your plan, your entry, your stop, your target, over and over and over again. You let your statistical edge handle the rest.
Now, thinking in probabilities is great, but it can't just be a philosophy. It has to translate into how you actually trade. And that's all about creating structure and getting rid of chaos. Because, let me tell you, having a clear process is what kills emotional stress. Just look at the difference here. The losing trader is all over the place, driven by emotion and impulse. They're constantly reacting. But the profitable trader? They work from a fixed, pre-planned model. They're proactive. They don't chase the market. They wait patiently for the market to come to them and give them their specific setup. They end up trading less, but way, way better.
Here's a paradox that most people just never get. They get into trading because they want excitement and action. But real, lasting consistency? It's found in boredom. I'm serious. It's found in showing up every day and just doing the same simple, effective things over and over again. It becomes a job, not a trip to the casino. Okay, so as we wrap up, let's just make this crystal clear. What does this internal shift really look like? What's the tangible difference between the person who starts this journey and the one who actually makes it to profitability?
On the left, you see everything that struggling traders chase after. The next shiny object, another book, one more indicator. They think the problem is outside of them. But the real work, the real gold, is over there on the right. Profit comes from mastering your own internal world, your risk, your discipline, and your emotions. These are skills you build, not secrets you find.
So the bottom line is this. Your P&L, your account balance, it's not going to change until your perspective does. The journey from losing money to making money doesn't happen on your computer screen. It happens between your ears. So the only question left to ask is, are you ready to do the internal work to make that shift?